Okay, let's kick things off. When most people hear IMF, the International Monetary Fund, well, you probably think about global economic forecasts, right?
Exactly. Or maybe those big lending programs for countries in trouble, exchange rates, trade balances, that kind of thing.
For sure. I mean, it's a huge pillar of the international financial system, set up way back in 1944, over 190 members now.
Focused on monetary cooperation, stability, economic growth, the big picture stuff.
But today, we're doing deep dive using source material from FinCrime intelligence.
Mm.
And it takes us somewhere maybe less obvious.
Right. We're looking at the IMF's role, a really significant one, it turns out, in the global fight against financial crime.
So our mission here is to figure out how. How does this massive global body, which let's be clear isn't like the FBI or Interpol,
Yeah, no badges, no arrests.
how does it still manage to have such a big impact on global financial integrity and, anti-financial crime efforts?
It's fascinating, isn't it, how this institution built for macroeconomics gets so involved in the nitty-gritty of illicit finance. They don't chase the bad guys, but they definitely shape the arena.
Okay, so if they're not, kicking down doors or seizing assets,
Hmm.
how do they exert this influence? What are the mechanics?
Well, it's really about influencing the systems uses or exploits. The source points to a few key ways.
Okay.
First, you have their regular checkups on countries' economies. Think of them like economic physicals.
There's standard country assessments.
Exactly. And during those, they directly advise governments on making their AML and CTF frameworks stronger, anti-money laundering and counter-terrorist financing.
So they're literally saying, hey, your system for catching dirty money needs work.
Pretty much, yeah. They use that advisory platform. And then there's a really big tool called the Financial Sector Assessment Programs, or FSAPs.
Ah, yes, the FSAPs. They do those with the World Bank, don't they?
They do. And these are deep dives. They look at the whole financial sector stability, but, and this is crucial, they specifically evaluate vulnerabilities, including risks from illicit finance.
Okay, so it's not just a quiet word. The FSAP publicly flags weaknesses related to financial crime risk. That's quite powerful.
It puts real international eyes on it. And beyond FSAPs, they monitor broader macroeconomic risks that are, often tangled up with corruption, fraud, governance problems.
Issues that make financial crime easier.
Precisely. They see those not just as economic issues, but as enablers. And then there's capacity building, helping countries actually build stronger institutions.
Like what kind of institutions?
Key ones for this fight: financial intelligence units, the FIUs, that handle suspicious activity reports.
Right.
Central banks, regulatory bodies, supervisors, they're helping build the actual infrastructure needed to combat this stuff on the ground.
So advising, assessing vulnerabilities, and helping build the national capacity.
Hmm.
And the source stresses they're not doing this in a vacuum. They work closely with the rule setters.
Absolutely critical point. Collaboration is key. They work really closely with bodies like the Financial Action Task Force, FATF.
The main standard setter for AML-CFT.
That's the one. And also the Egmont Group, which connects all those national FIUs globally. The IMF uses its clout.
It's economic muscle.
Yeah, its economic muscle and its platform to really push member countries to adopt and, importantly, implement the best practices these groups lay out. The IMF's backing adds serious weight.
That makes a lot of sense. It's one thing for FATF to say, here are the standards, but it's another when the IMF echoes, and following these is vital for your economy's health.
Exactly right. And this ties into another core theme from the source: how the IMF explicitly links corruption and weak governance to financial integrity.
Okay, how do they draw that line?
Well, the IMF's stance is pretty clear. Corruption, bad governance, they just fundamentally mess up economic performance and integrity. So tackling them isn't just a nice to have, it's actually core to their mandate of economic stability.
So how do they help countries tackle it?
They promote things like transparency in the public sector, better accountability, strengthening how governments manage their money, fiscal governance, and supporting reforms that uphold the rule of law. Basically, cleaning up the environment where financial crime often thrives.
And the source mentions specific high-risk areas like PPs, politically exposed persons, and state-owned companies.
Yeah, those get specific attention. They're seen as particularly vulnerable to corruption and illicit flows. So the IMF helps countries design regulations with safeguards for those areas, often drawing directly from the FATF playbook.
Right, making those abstract governance ideas into concrete anti-crime measures.
That's where the rubber meets the road.
And then comes what the source suggests is maybe their biggest stick,
Yeah.
tying governance and transparency directly to their lending.
This is probably their most powerful tool, yes. When a country hits economic trouble and needs IMF financial help, that money often comes with strings attached. Structural reforms are required.
Not just suggestions, conditions.
Conditions. You have to do X, Y, and Z.
So what kind of financial crime or governance reforms might be included in those loan conditions?
The source gives examples like requiring better financial sector supervision, so banks are watched more closely for illicit activity, implementing specific AML-CTF safeguards,
Okay.
pushing for beneficial ownership transparency, making it clear who really owns companies and assets, not just shell corporations, introducing anti-corruption controls, sometimes requiring better oversight of things like public procurement,
Government contracts?
exactly, or taxation, how the government spends money, all areas historically prone to graft and illicit flows.
Wow. So getting crucial financial aid literally depends on cleaning up your act on financial integrity and governance. That's a powerful incentive.
It really is, and it's not just a one-off agreement. These programs often have specific anti-corruption benchmarks, measurable steps the country has to take.
And the IMF checks up on them.
Oh, yeah. They monitor progress over time through follow-up reviews, missions visiting the country. They keep tabs.
It sounds incredibly comprehensive, really leveraging their main job for this other goal of financial integrity. And it fits into a bigger international picture, right? They're not alone.
Definitely not alone. They're a major hub in a network. We mentioned the World Bank. They partner on FSAPs, provide technical help on anti-corruption and AML.
And the standard setters, we talked about FATF, Egmont Group.
Right. Working with FATF and its regional bodies to push standard adoption, working with Egmont to boost FIU cooperation. They also link up with the OECD, the UN on things like tax cooperation and illicit flows, the Bank for International Settlements, the BIS, on issues like financial inclusion.
Making sure bringing more people into the financial system doesn't open new doors for crime.
Exactly. It's this coordinated, multilateral approach that really boosts the effectiveness, the credibility of the whole global anti-financial crime framework.
Okay, so we've traced how this major macroeconomic player, the IMF, has this really quite powerful, if indirect, influence on fighting financial crime through its advice, its assessments, the governance work, those loan conditions, and all these partnerships. So let's bring it home. What does this actually mean for you, the listener, especially if you work at a bank or fintech or any regulated firm?
Well, understanding what the IMF is doing is genuinely valuable intelligence. For starters, it helps inform your geographic risk assessments.
How so?
If you know a country is under an IMF program, especially one with anti-corruption benchmarks, you know there's likely pressure, or at least scrutiny, on its AML-CTF regime, on its governance, on transparency. That's critical context when assessing risk for that jurisdiction.
Right, especially for high-risk or developing countries, it could directly impact your due diligence approach, maybe your compliance program for that region.
Absolutely. It supports strategic compliance decisions, how you design your program, how deep you go on third-party checks, how you view counterparties there. It also gives you clues about wider macroeconomic and political risks. IMF involvement can signal shifts in market stability or regulatory priorities that you need to be aware of.
And it might even help you anticipate regulatory changes coming down the pike.
That's a key point. If a country is getting IMF help, reforms are often part of the deal. Monitoring IMF reports, their assessments, the details of lending programs, it can give you a heads up about potential new regulations or enforcement priorities, especially in areas like AML, anti-corruption, beneficial ownership.
So it's not just academic knowledge, it's practical intelligence.
For sure, actionable intelligence for risk management, for looking ahead at regulatory trends, even for broader business strategy.
Okay, so the main takeaway then from this FinCrime intelligence deep dive seems to be the IMF, while definitely not a financial crime cop, is a massive influence on global financial integrity. Maybe an indirect influence, but huge nonetheless.
Through its advice, its assessments, its lending power, and its web of partnerships, it shapes the environment significantly.
Which leaves us, and you, with a pretty interesting thought to mull over, based on the source material.
Yeah, given just how powerful the IMF is in setting conditions and shaping policy for countries needing its help, how much does the integrity of the whole global financial system ultimately rely on countries actually choosing to listen, to accept that guidance, and truly implement the reforms the IMF requires?